Hello everyone and welcome to Day Trader S&P 500. Today is March 7th, 2021. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top-ranked stock market timers. And I got that bond market award there highlighted for a reason. We will get into that. Wanted to let you guys know we have Woodson Wave Report established in 1997. We have annual subscription, monthly subscription, and I want to let you guys know I will be on vacation for a week, March 20th to 27th. I doubt I'll be able to get any YouTube videos out at that time, so I wanted to give you advance notice about that. We have a lot to cover today. Let me see. Before we get started, let's remind everyone to hit the subscribe button, the reminder bell, and the like button down there. And it doesn't come up, but there is a like button down there. So I appreciate your patronage to the channel. We're going to cover a lot, as I said today. It's our regular weekly update. And let me get to where we need to be. We're going to cover the S&P, the NASDAQ, Tesla, gold, Bitcoin, bonds, and XLF. There's a reason why I touched on bonds. I want to get to that. Let's start with this 5-minute bar of the S&P. This is what we put out last, I believe it was Thursday, and we had a make or break level of 38.43. This was our wave count. And the beauty of Elliott Wave is you know when you're wrong, and this was broken Friday, and we were wrong. We put out a midday report to our subscribers, and want to update everybody on YouTube tonight with where we are. Okay, so let's get into the S&P, and this is the 5-minute bar, and this is a correct wave count. Okay, we knew we were wrong, so what is right? What happened is this third wave extended. I had it, I think, down up here before, and then we thought that was a move up. But this is the correct count from that wave to March 1 high. Here is that beginning, the top back there on February 16th. And we won't get into that, but that was wave 1 down. This is wave 2 up. And you can see here is wave 1 of 3, and here is a retracement up, and we're in a familiar position here. Here we are again with a second wave, which is between a 1.618 and, I'm sorry, I don't even have the retracement in there. Okay, that was the wave 3. Okay, pardon me. Here's wave 1 down, here's wave 2 up, and here we have 3 extended to a 2.618 retracement. We have a wave 4 and a wave 5 down. Now we've got an ABC correction up. So let me get rid of that so it doesn't confuse you guys like it just confused me. Okay, third wave extended, and this third wave went to a 2.618 multiple of the first wave. Let me get that out of the way. Okay, now we can see the retracement here. Give me a second. And we'll get up here, and we have there. And we're just above the 618 retracement. Wouldn't be surprised to see it go to 786. That's what they've been doing with these second waves at every degree. This is still third of third of third. Okay, it's just now a different scenario where this wave 1 ended here. Okay, so we got an ABC up. Could go to the 786, cannot go above that. I believe it's 39. It might even be 14. Let me see if I can get on it there. Yeah, I think it's 14. My red line might be off by just a touch, okay? But that is the new make or break because that count was wrong because we didn't see the third wave extension at the time. Okay, so that's where we are with that. All right, let's get into this a little better here. I wanted to explain this, that 216 high and a 1 down and a 2 up. Okay, now that this has moved down this far, we can definitely say that the move up from January 29th is complete. There was a bear market case where it was just a correction, but if it was correcting this advance, even if, and we talked about this last week, we moved wave 1 down here and we moved 2 down here, if this was a fourth wave, it cannot go lower than the wave 1 high, which would have been here, and it did. Okay, so this is correcting. It's not a fourth wave correction of this. Okay, it's probably more than that, and we'll get into that later. It's probably more into, and this was our make or break back here. Where is that? That's January 29th. Okay, let me back out even further, guys, so we can get a little better explanation. There, we're getting into it. Okay, it's most likely a minimum of this wave up that started off of that fourth wave flat. Yeah, I'll get it in here. Okay, yeah, that October 30th, 55 days from the high, that was a 1 and a 2 and a 3, 4, 5. So if it is correcting more, which it most likely is, let's get our retracement here. Let's say there's the October 30th low, and there is the all-time high. We're looking at a correction down here at 382 at 3678. We've got a 0.50 right around the 3600, and then just above 3500 for the 618. Okay, but we need to see this. Where is that at there? That 3646 high is still the validation point, if you will, because that would make, that's the wave 1 high, and this, if it's a 4, it cannot go below this high. So that's what we're looking for validation of the bear market count. Of course, the bull market still has that all-time high of 3950, and that means we're going to 39.99. Okay, so I want to look back on that 4-hour back to the 129 and just give that a quick look here real quick. Okay, is that the 129 low? Yeah, we did that already. Okay, and what I also wanted to mention here, I don't know if I got it on this chart here. No, I don't. We'll use this one here. If you look at this line here, which is from the top to the wave 1 low, okay, see that there. I'm going to do this to compare, just to show you guys something here from the second wave high. All right, and that's a wave 1 of lesser degree, and that's a wave 2. Compare this wave 1 line, see that angle of descent, with this decline. Okay, if this were an ABC correction, which it would be A down, B up, C down, this angle would be more like that. Okay, similar to the A wave. But this is how we can at least think that it's a third wave because of the angle of descent. If this is a third wave, it's going to go faster and quicker than the first wave. If it's a normal ABC correction, then we look for a move down similar like that, same angle of descent, or even less in a C wave. Okay, so that's a very telling sign there. And while we're here, if I can get that close to, if we can say that that's over, and it may go up to 768, within wave 3 of 3 of 3, we have a target here. Boy, that's getting a little messy with all the numbers there, but I think it's 3660 for this wave down to equal that first wave down. Okay, that's a near-term target. All right, again, we want to see this high here at 3914 is our new make or break for this count here of 3 of 3 of 3. I want to get into bonds here real quick, okay, because it's a big deal. Okay, we've had basically a 40-year bull market in bond prices, and yields are opposite interest rates. Okay, this is very important. All right, while the price goes up, interest rates go down, and it appears, and I couldn't get a chart to go back into the 70s, but you can call this market that began in 82 or 74. That's 1982, 1974, and yes, I was around for those, as complete with this blow-off top back in March of 2000. Where did everything else move? Okay, so that looks like a completed pattern. Since then, since March, the price has come down and interest rates have gone up a ton. And that's what's spooking the market. The interest rates, not the rise, but the speed of the rise. Let me see. I think I have a chart here on this. Let Let me see here. No, that's not. Yeah, I'll get to that. Okay, here's our bond report that we put out in the March Woodson Wave Report, and we can see a completed 5 waves from the October 2018 low. And let me see. Let me go back here. I think, and that should be, yeah, the October 2018 low. That's a completed 5-wave pattern, as we can see right here. 1, 2, 3, 4, 5, and we started our decline. The initial price targets are here for the price of bonds. It might not mean much to you, but the interest rates will mean a lot more. Okay, and if we can look at this, that's the speed of the rise I'm talking about. The interest rate going up isn't as important, or it doesn't scare the market as much as the rate of increase. That move there in just a year is over a 200% rise in interest rates. And while you get ridiculous moves in the stock market, you don't get ridiculous moves like that in bonds. Okay, and I've written numerous articles over the last 2 decades or more with charts that show that the Fed is not in control of interest rates. They do not set interest rates. So the traders in the pits in Chicago set the rates, and the Fed follows. The traders lead, and the Fed follows. The Fed cannot lose control of interest rates because they've never had control in the beginning. The tail does not wag the dog here. The dog wags the tail. I can remember back in the 70s and 80s when bonds were really an essential part of portfolios, and the recommended allocation was 60% for stocks and 40% for bonds. And back then, 401ks were a new type of investment way back in the early 80s, and I was working and got one, and people were afraid to buy stocks. And what happened was it was following a 16-year bear market in stocks from 1966 to 1982. Okay, it looks like this 40-year bull market in bond prices and rates going down has ended. Okay, let me get to which reminds me, speaking of, I got a lot to cover with you guys here. Okay, let me get that other chart up here. And I'm thinking back in 1999. Okay, I called that as the orthodox top, the August 24th, and while the market made new all-time highs, this spiral chart, of course, 55 days later was the low, but it caught all the highs for 7 years, as you can see in 2006. And speaking of 401ks, I remember back in 99, I had a friend who wanted me to look at his portfolio, and he had about, let me keep this up. He had about 675,000 in his 401, and he wanted to get to $1 million and retire. This is 1999, and I myself was in the guaranteed interest fund at 3%, which was low at that time. But I was glad to take my little bitty tiny 3% gain, while my eventually friends ended up losing 30, 50, 70% or more of their portfolios. And what he wanted was, he said he had, well, he had a bunch of money in this company called JDSU, and he wanted to know what my take was. And I said, I would sell JDSU. He goes, why? I go, well, I think the market's going to top and there's going to be a big decline. This was late 1999. So here's what happened to JDSU. You can see here, here's 99 to 2000. This looks like a lot of stocks now, and then bam, his 675,000 turned into less than 100,000. That's his 401k. He planned on retiring in the year 2000 as soon as he made it to $1 million. Instead, he was under 100,000, and he just retired, I think, 2 years ago in 2018. There's a lesson to be learned there. There's a lot of stuff like that going on now. So just be careful, okay? So let me get back to our charts and see where we are here. We don't need that. My apologies, guys. Let's get into our charts. Here we go. Okay, I want to look at, so that's the thing. Interest rates are going up, and it's a big deal, and it's spooking the stock market because of the rate of increase. Keep that in mind. Okay, so let's get into gold. Okay, there's no change in gold. Gold looks like it topped in, well, it topped, but this move down doesn't look impulsive, meaning it looks like a corrective move. Okay, we've moved to a short position with our Woodson Wave Report, but we're looking at a three-wave decline. There's A down, there's B up. We're looking at a target of 1644, or at the max 1448, and it looks like this trend will continue because this doesn't look like 5 waves down impulsively with gold. Okay, so we're looking for this to go down and then resume its uptrend. Tesla, we want to look at Tesla. Tesla has made an incredible move to the downside from the 900 high. We've revised our count. You can see from that October 30th, that's wave 4 for everybody. There's 5 waves up, and you can see this thing is just moving down. I have a lot of wave counts in there, smaller degree and stuff. But let me just see what this has retraced from the most recent 4th wave low. Let me get it here and up here. And you can see it's so far retraced about a 618 of the last wave up, and it's in the previous 4th wave of 1 lesser degree. This thing looks like it's breaking down in 5 waves to the downside and corrections to the upside, which tells me there's a change of direction to the downside. How this could go a lot further. Let me see on our daily chart. By the way, I don't know why TradingView has this here, but this is not correct. Okay, it keeps showing up for me, but that was somewhere back around here. Let's see, that was March 4. Let's see in here, March 4. Yeah, you see no big spike up in there. It was right before yesterday. So ignore that big red bar. Okay, you can see we got that 4th wave there. But the reason I want to look at this daily is I'm going to look at this entire move up from the beginning to see if it's going to correct the entire 5 waves, and we've got a long way to go to get to the beginning of one. Bear with me here, guys. Okay, let me get that down there, and there's where it starts. So let me get a retracement target here that is close. It may not be exact, but it's close. I know this number is 900, so we'll get it there. Excuse me, there. So you can see we're about at the 382 for the entire advance right now. This thing went from 900 to under 600 in no time. So that's 574. It's already been achieved. We have 474 for a 50% retracement and 373 for a 618. I've thrown the 786 in there just because the S&P keeps retracing upwards at the Fibonacci 786. So there's our bigger look at Tesla. Okay, now we are going to get into the NASDAQ. The NASDAQ appears that it has topped, and it looks like it hit a high at February 16th, just like the S&P appears to have hit a high. So let's look at this and see what we have here. And it's the same pattern with the one down there. Okay, and then there's the 2 up, ABC correction. That would be A, that would be B, that would be C. You can see this wave down has gained equality. So this could be a 1, 2, and a 3. If that is the case, this move up cannot go above there. It's also possible this is subdividing, where this is 1 and this is 2, and this is a new decline. I'm sorry, this is 2, and this is 1 of 3, then 2 of 3. Okay, so let's look at that retracement. It's probably the case if it's more like the S&P, a series of 1s and 2s. And we can get, there we go, 382. It just hit. You can see the 50% is at 13,011. 618 is 13,153. Okay. Otherwise, we're looking for a continuation of the downtrend. So allow for that move up. 786. I guess it's possible since the S&P is hitting it. We're looking at 13,356. Let's move on to Bitcoin. And this is up from the last time I did Bitcoin. I didn't take it down. We were looking for a wave 5 target, and we hit it. I don't know what that number is because it's just under 6,000. Let's see here. Yeah, I can find it right here. It's 58,354. And that's where we're looking for 5 to gain some kind of multiple with 1, and it gained a 1.618 multiple on that high, which was February 21. Okay, so let's move that out. We don't need that anymore because we already know where 5 is. Okay, and I got the Fibonacci retracements for the most recent 5-wave advance on here. You can see the 382 is 37,516. 50% is 31,085. And a 618 is 24,654. Okay, that's what we're looking at for Bitcoin. And again, it's likely if it's still going higher, then it'll retrace to a fourth wave of one lesser degree. So in between the 382 and the 500 would be a perfect place for this thing to land before it goes higher. And I want to look at XLF. Okay, XLF seems to be important to the market. Okay, you can see everything counts from the March lows. We have a 1 up, a 2 down, a 3 up, a 4 down. We're looking for a 5 target, and that 4 low is January 29th. That's similar to the S&P's last 5th wave. So let me get more into, let's get an hourly chart on this. Let's bring this down and open it up so we can get in here. Okay, so this is a first wave up. Let me label this for you guys. Okay, let's get a 1, 2, 3, 4, 5 going. That would be 1, that would be 2. That degree is too high. That would be 3, gains equality with 1. There's 4, and there's 5. And I want to change that degree real quick here. Let's make that way lesser. Make it micro. Now let's make it lesser than that. Let's make it submicro. There we go. Okay, so 3 equals 1 there, and you can see here we've got a 1, 2, 3, 4, 5. So the minimum requirement for 5, it has to be higher than 3. It is, and it separates in 5 waves. It's not an ending diagonal triangle, so it meets the 5-wave requirement, and it is higher than 3. So it could be that it's just a lower. It didn't gain equality with 1. Okay, there's the next target on the upside. What we would need to see here is a break, obviously, of that wave 1 high, which is way back here. It might be similar to the 3646 of the S&P at 3138, but would be not, well, obviously we need to see this high hold to be correct. Okay, 33.95. If it breaks that, obviously it's going to new highs. Let me put this up here. Let's remember that 35.32, and let's see, where does 5 gain equality with 1? 34.89. Okay, so if that continues higher, if this high is broken, look for it to go to 34.89. That's where 5 gains equality with 1. Otherwise, that 5 is in, and we've started down. Let's see what that looks like again. Let's go. We're on an hourly. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, that's 5 waves down. That's an up. Let me get a target if that high holds. Let's see here. We get an extension. XLF. Bang. There we go. And there we go. So we'd be looking at a minimum move to 32.44. 31.60 is a 1.618. That's if this high holds, which was just Friday, I believe. Yeah, March 5, and that was 33.79. Okay, we go higher. We break this high here of 33.95. Then we're probably going up to 34.89 before this thing goes down. Okay, that's it, everyone. Thanks again, and until next time, take care.